Okay, now to your say, and this week we asked people on the street what factors they think are contributing to the upward trend in property prices.
9:30 yet again.
Young people and first home buyers are encouraged because of the low interest rates.
Overseas demand, especially the Asian, Southeast Asian region.
It's the cheap interest rates people can borrow at.
I think times of the year.
Shortage of supply, banks increasing lending and making it more accessible.
Europe's not in the best place at the moment economically, so people are still coming from that part of the world over here.
And capital cities being a very desirable location for immigration.
I, along with a lot of my friends, think it's foreign investment coming in and moving money from overseas here and buying up.
Another 5 on the nod.
A lot of different opinions out there on the street. So, what do the experts think? Joining us is Paul Glossop, best-selling author of A Surfer's Guide to Property Investment. Good morning, Paul. Give it to us straight. What is causing this constant rise in property prices?
Look, I personally think that it is a combination of both interest rates and the easing of credit access, both around about mid-year last year, which is more or less given every single borrower somewhere between 12 and probably up to about 20% more buying capacity based on lending restrictions that have been lifted, as well as 3 interest rate cuts that came through last year.
Paul, plenty of people on the street saying that overseas investors are part of this. You didn't mention it there. Do you think that factors in?
I truly don't, and I think predominantly the overseas investment was focused a lot more towards that new and off-the-plan stock, and because that supply is now drifted out and there's a lot less of that supply coming into the market, that overseas demand really isn't there, and the predominant drivers of where this growth is coming from at the moment is upsizers, downsizers and first home buyers, which is a good news sign for a lot of those Gen Ys and millennials. For sure.
Now, we had that Banking Royal Commission. Do you think the banks have tightened their lending policy, or are we almost back to where we started?
I definitely think that we're probably circa 2014-15 timeframes where we've seen a lax of lending restrictions. We've seen 3 interest rate cuts. Chances are we'll probably see 1, maybe another 2 this year. So as far as access to credit, yes, there's a lot more scrutiny that people need to go through, but the access, if you are a qualified buyer and a qualified person who's going to be a decent candidate to the bank, the money's yours to take.
So the banks still want you?
They do, apparently, because...
do.
Paul, we've saw that lending figures out of December were up 4.4%. I mean, that is one of the biggest months we've had in over 3 years. So you mentioned first-home buyers and owner-occupiers. Are investors diving into this market, or are they a little bit more cautious?
They're still probably a little bit of a laggard, but I do think that we'll start to see those ramp up very, very soon. And ultimately, it's a confidence game when it comes down to both access to credit, then confidence that your money's going to make money. So investors are only just now seeing the opportunities in the markets and actually being confident that growth is coming, coupled with the economy, lower interest rates are here to stay. I think those factors are going to see investors get into that market in addition to the owner-occupiers, first home buyers, which is probably going to stimulate the market even more towards the back end of the year.
What about some advice for investors? I mean, do you think that that's the right way to go? Would you be telling people to dive in and get out in front of it? And if you are, any particular areas that jump out?
Yeah, look, I unequivocally would say that if you are looking at buying your first or your 30th investment property, not that capitalism is key, but I mean, when we talk about property investing, it's about assuring your financial future. But if we are talking about when and how, I think now is as good a time as there been. Truth be told, it was probably this time last year if you really wanted to grab the absolute bargains. But I think markets which are going to produce both capital growth, limited supply, so focus on areas which aren't going to see huge amounts of greenfields developments in the freestanding housing space, as well as 20, 30, 40-storey high-rises. They're the aspects that you need to focus on, and make sure you balance your cash flow based on what you need, because this growth period will be relatively short and sharp in probably more so Sydney and Melbourne, but you have to make sure you can hold that property after the growth has come. So do your numbers on your cash flow as well.
Paul, I think there's a lot of confidence when you are buying bricks and mortar as opposed to, say, shares, if that's your thing. But how is that when you're buying perhaps interstate or looking interstate for an investment property? I know there's not the confidence that you can drive past it every day and check that it's still standing, but would you suggest people investing look outside, perhaps their state or their comfort zone?
Yeah, unequivocally. I think we live in the age now, and Australia has the best property management systems in the world. And one thing that is always assured is that we can be comfortable knowing that the laws that regulate both your tenants as well as the ability to make sure your investment's sound and secure long term is going to be there. So investing into state, there is no excuse for first-time investors right through to seasoned investors. If you're not looking at data and property types which fit your budget as well as what you're trying to achieve out of that property in any state right now, I think you're doing yourself a disservice, and you're probably going to miss out on potential potential growth and opportunities that might fit where you're after. So just because your budget might be limited in the state or the city that you're in, doesn't mean that you can't invest or you shouldn't be investing in the market right now.
Thank you so much, Paul. Gosh, I've got to have to make notes. There's a lot to think about there, or maybe just get the book.
That would be good.
Thanks for joining us so much.
Thank you.